Good morning. Myself is Sovarnanjali, working as the assistant professor in Commerce Department from PB Siddhartha College of Arts and Science, Vijayawada. Today, I am going to explain about meaning of accounting and accounting rules and how to apply accounting rules. Okay. So, first, meaning of accounting. Account- Accounting is considered as a system which collects and processes financial information of a business. Okay. This information is reported to users and to enable them to make a appropriate decisions. And one of the most important definition and defined by the American Accounting Association, that is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. Okay. And the main objectives of accounting is to maintain the accounting records. To maintain accounting records means that is day to day activities. Okay. Like journal, journal book, ledger book, subsidiary books, P&L accounts, financial statements, P&L accounts, balance sheet, whatever, to maintain all types of accounting records. And to calculate the result of operations. Result of operation means to calculate the financial position of a business, like asset position, liability position, and net profit and net loss of the business. And one of the most important objective of accounting is to communicate the information to users. Okay. Next. Actually, every transaction has two aspects. Every transaction means day-to-day activity of the business. Every transaction has two aspects and each aspect has an account. Okay. Each aspect has an account. In it is stated that an account is a summary of relevant transactions at one place and relating to a particular head. Once again, I repeat, every transaction has a two aspects and each aspect has an account, and an account is a summary of relevant transaction at one place relating to the particular head of the account. Okay. And accounting rules. First of all, the transactions relating to a particular item, if recorded at a place in a summarized manner, is a called accounting. Already we know. And how many types of accounts? Mainly, accounts are classified into mainly divided into two categories. One is a personal account, and the another one is a impersonal account. Personal and impersonal. Personal account means transactions are day-to-day activities of the business transactions. Transactions relating to the individuals, institutions, association, or a firm. Firm means partnership firm or companies. Okay. Those transactions are relating to the individual or institution or association or firm or company. Okay. For example, transactions means like cash paid to Ravi, cash received from XYZ company, goods sold to PQR Limited, whatever. Ravi, Ramu, XYZ. Okay. These are the examples of persons. Persons means either natural person or artificial person or representative persons. Okay. According to personal account, there are three types of personals. There are three types of personal accounts: natural person, artificial person, and representative person. First of all, accounts are divided into mainly divided into two: personal and impersonal. Okay. How many types of personal account? Three types: natural, artificial, and representative person. Okay, what do you mean by personal account? Personal account means transactions are business transactions are relating to the individual human beings, okay, or institutions or association, firm or companies. Okay. So what is the rule for personal account? Actually, the rule for personal account is debit the receiver and credit the giver. Receiver always debit and giver always credit according to personal account. So who is the receiver and who is the giver, and how to identify the personal account and how to apply the personal account? Let me explain one example. For example, cash paid to Ravi. Okay, in this example, Ravi is a receiver. Okay, so according to personal account, receiver always debit. So Ravi account data to cash account. And one more example, cash received from Somu. In this example, Somu is a giver because cash received from Somu. Okay, Somu is a giver. So Somu is a person. According to personal account, what is the rule for personal account? Debit the receiver, credit the giver. Somu is a giver. So what comes in cash? Cash account data to Somu account. Okay. And the next one, the next account, the second account, that is impersonal account. Actually, impersonal account is divided into subcategories of two. Okay, subdivided into two types. The one is real account and the second one is nominal account. So first, real account. Real account means transactions are relating to the business assets. Transactions are relating to the business assets. Actually, assets means assets are also divided into two categories. Okay, tangible assets and intangible assets. And tangible assets examples are buildings, machineries, furniture, land, etc. And intangible assets examples patent rights, copyrights, goodwill, etc. Okay, once again, the second account is impersonal account. Okay, impersonal account. Again, it can be subdivided into two categories, real account and nominal account. So, according to real account, the transactions are relating to the business assets. Okay, business assets are divided into two categories, tangible and intangible assets. Tangible and intangible. What are the examples of tangible? Furniture, machinery, land, and building. Examples of intangible: copyrights, patent rights, goodwill, etc. Okay. Now, the rule for real account. Okay. Real account rule is debit what comes in, credit what goes out. Debit transaction is what comes in, credit transaction is what goes out. Okay. So, real account deals with assets. According to real account, to record asset related transaction. For example, one of the most example of real account, furniture purchased. Furniture is a tangible asset. Furniture purchased. Furniture is a tangible asset. So that's why it is related to the real account. What is the rule for real account? Debit what comes in. So according to this example, furniture purchased. So what comes in? Furniture. And what goes out? Cash. So furniture account data to cash account. Okay. And one more example, machinery sold. Machinery is also asset. Okay. Asset means that is related to the real account. So what is the rule for real? What comes in, debit what comes in, and credit what goes out. Machinery is sold. What comes in? Cash. So debit cash. What goes out? Machinery. So in this credit, machinery. So now the journal entry is cash account data to machinery account. Cash account data to machinery account. And the second impersonal account is nominal account. Okay. In this nominal account, to record transactions are relating to the business expenses, losses, incomes, and gains. Once again, according to nominal account, what type of transactions are entered? What type of transactions are related to the nominal? Business expenses, business losses, business incomes, and gains. Okay. So the rule for nominal account is debit all expenses and losses, credit all incomes and gains. Once again, debit all expenses and losses, credit all incomes and gains. So the example of nominal account, rent paid in form of cash. So rent is a expenditure, one type of expenditure. According to nominal rule, what is the rule for nominal? Expenses and losses are debit. Rent is also a expenditure. So rent account data. So debit transaction is rent account. And the credit transaction is rent paid in the form of cash. So two cash account. One more example of nominal account. Commission received. Commission received means that is a income. So income also related to the nominal account. According to the nominal account rule, incomes are credit. So commission received is a credit. And debit, cash received in the form of, commission received in the form of cash. So cash is a debit. Okay. Cash account data to commission received account. Again, wages paid. Wage is also expenditure. So all expenses are debit. So wage is a debit. The debit transaction is wages. Wages. Next, rent, telephone bill paid. Telephone bill is also expenditure. That is also debit transaction. And next one, discount received. Discount received means that is income. So income received. So discount received is a credit transaction. That's it. Okay, once again I repeat. First of all, accounts are divided into how many categories? Two categories. Personal and real account. How many types of persons? Personal accounts, natural person, artificial, and representative person. What is the rule for personal? Debit the receiver and credit the giver. And the second account is impersonal account. Impersonal account is divided into subcategories of two. Subdivided into two categories. Real account, nominal account. Real account means transactions are relating to the business assets. Okay. Nominal account means transactions are relating to the business expenses, losses, and incomes and gains. Rule for real account is debit what comes in, credit what goes out. And rule for nominal account is, rule for real account, debit what comes in, credit what goes out. Rule for nominal account is debit all expenses and losses, credit all incomes and gains. Thank you.